Everybody, I'm going to go and get started for the purposes of time. I'm going to share my screen here in a little bit. But before I do, I just want to do a brief intro on who I am, why I'm having this particular webinar, and why I'm so passionate about this topic. This topic was really inspired by many conversations that I've had with multiple CEOs over the last 10 plus years, right? So I am Tasha Anderson. I am the founder and CEO of the Charity CFO. And this is a boutique accounting firm that works exclusively with nonprofit organizations. And frankly, a lot of my clients come by way of changes in CEOs. Sometimes CEOs realize they need a better solution to their accounting and their accounting function. Sometimes we're already working with the client and a new CEO comes on board. And it's really surprising to me to find myself in these conversations with these new CEOs, and they're really struggling to put their arms around their finances, really understanding where are the gaps, where are the holes, what are the issues that they need to triage immediately. But in some cases, I will have people reach out to me and ask me, hey, I'm thinking about taking this seat. These are, more of my friends and acquaintances that I've met and developed good relationships over the years. And they'll ask me questions about, hey, should I be considering a leadership position at this particular organization? Why or why not? And I start looking at some of the finances that are all publicly available, 990s, tax returns, audits, things like that. And there's some red flags. There's some red flags, or at least questions that I think CEOs look at in hindsight and wish they would have asked. So that's really kind of the inspiration around this particular webinar. So this is intended to be collaborative. So please do me a favor and put any questions that you have in the Q&A section, and we will be fielding questions throughout. Kim is also from my team here to help moderate and lift up questions as it makes sense, but I will certainly leave some time towards the end of this conversation for other more specific questions. So go ahead and put your questions into the Q&A section. We'll respond to those. And now I'm going to go ahead and share my screen and get started on this. So let me make sure I have multiple monitors, multiple things going on. So hopefully I do this all right. Okay, so as I mentioned, I'm Tasha Anderson, and I'm kind of sharing a lot of my experience specifically within this space, and some of the lessons learned and some of the things that I've advised my clients through. And I really wanted to focus on these things that we're going to go over today. The red flags that often go unnoticed, that maybe you don't realize until after the fact. Things to ask for in audits and budgets and various financial reports that you might see within your organization, especially if you're brand new into that organization. How to assess your finance team and the systems that they use, right? Is it a capacity issue? Is it a people issue? Is it a system issue? These are all questions that I find our new CEOs are asking themselves in and around their organization. How to spot risk hiding behind clean reports. So what are the not so obvious things that are often missed and uncovered later on? And then also what to prioritize in your first 90 days, in my opinion, based on my experience. So a lot of this is also inspired by, like I said, some of the work that we do for our existing clients. When we have a new CEO come on board, it's like, how do we get them up to speed on the things that they need to be aware of, the things that we're actively working to solve, and how can we get their support and buy-in to kind of transform some of those things. But let's start too with why we are here. Ultimately, most CEOs, they get more than just a mission. They get more than just a vision. They get more than just a strategic plan. They often get a lot of risks. In some cases, risks they don't even realize that they are inheriting necessarily. And some are obvious and some are a little less so obvious. So we're going to talk about what some of those are. Financial issues in so many cases pop up after the fact, very reactive. It's quite a surprise in some cases, and we're going to give some case studies and testimonials about, what some of those specific financial risks are. But oftentimes it's, I don't want to say too late to correct them, but like too late to fix them proactively, right? Too late to address them. Sometimes it becomes more public, whether it's to your board or to your funders, certainly to your auditors, and it's uncovered after the fact, right? And then oftentimes I find that if nothing else, asking better questions while you're considering a new CEO position, or the questions you're asking straight away, will often change the trajectory of, your maybe your leadership, maybe your onboarding, whatever that might look like for you, right? So these are all things that we're going to be talking about today and really kind of centralized on why we're here. So who did I design this for? What was my inspiration? As I kind of already alluded to, nonprofit CEOs, the first time nonprofit CEOs, I'm really kind of speaking to you, and I'm talking about individuals that um, are maybe coming up through, maybe they were a director of program at some point, or maybe they're a development director, or maybe they already worked within other parts of an organization and they have some understanding of the mission and the operations and how that might look, but maybe they don't have insights into the finances. Maybe that wasn't really their core of what they were doing, right? Um, Promoted internal leaders in other capacities, right? Whether it's within the organization or from another organization, these are especially important. I've had some great stories. And by great, I don't know if it's really all that great, but in reality, I have some great stories about hard lessons learned from for-profit executives crossing over into the nonprofit space. So maybe they have a lot of leadership experience and maybe they have a really good passion for the cause, but they don't understand the nuances of the nonprofit finances in a way that maybe more experienced nonprofit executives would have. And then, of course, board members supporting transitions. Board members, as we know, kind of come in and go out. And there's been so many cases for which I've seen board members are, you know, they don't know the questions to ask. They don't know what they don't know, right? And so these are a specific group of people that I want to shine some light on some of those hidden financial risks that, as a board member, you may not even realize exist. And I've learned this, like I said, over so many times, stepping into a new nonprofit and realizing there were a lot of like stones left unturned. Okay, so I want to give some like real life examples, and we'll just kind of cut right into it, right? So I want to give you a couple examples of things that I've personally come across within the organizations I've worked with. These are actually three different real life situations that I've recently experienced. So in one particular case, I had a for-profit executive step into a nonprofit leadership role. It was a small organization, and the board shared with the new executive, hey, this is your fundraising plan. This is your operational, goal. This is, the ongoing cash flow needed for your regular operations, essentially. This is your operating budget. Great. I think I understand. So they get in, and within, the first 6 months, they're starting to uncover things, pick up different things. And we realize, oh, hey, there is a loan coming due that was to finance, the renovation and build out of their office space. But here's the catch, it was a balloon note that was due the same year this person came on board. And what that means for those of us that aren't in the financing world, that means it's all due at the same time. And the problem is their organization had a financial situation that was admittedly kind of deteriorating a little bit, and they weren't really in a position to refinance that. So to kind of simplify what I was saying is that they're having to take their operational budget of, say, $750,000 and add on another $500,000 that they need to pay back to their bank. That was up and above what their operating goal was. So it wasn't really a $750,000 fundraising lift. That because they had no cash, by the way, to pay this off, right? It was actually $750,000 for ongoing operational costs, plus an extra $500,000 to pay off this note, or some sort of act of Congress to figure out a way to refinance this note. So that was a huge, wish I would have known about that, because that drastically changed what the fundraising target needed to be for that year in order to just raise cash to keep things moving as they typically were. So that was a hard lesson learned, and something that, in hindsight, we would have asked. And by the way, your audit reports should disclose all of those note terms. So if you are a new or incoming CEO, or you are a board member, or you are curious about the debt that's on your books, first of all, get a copy of the financial report. Take a look at the debt, ask a lot of questions about that debt. What are those repayment terms? What does that look like? When are they coming due? Is it all in once? Is it over a long stretch of time? Is it over, 20 years on equal payments? Or is it, in this case, a balloon note? And if you are a leader that's setting up a balloon note, kind of think about that in the long term. When do we need to refinance that, and what implications does that have on our long-term kind of organizational plan. I mean, are we going to be in a position to be able to refinance that? I often say to my clients, when you need money, that's when it's hard to get money, right? So unfortunately, if you're in an organization that needs to refinance a note, it's going to be really tricky to do if your organization, their financial position continues to, I don't know, not strengthen, let's say that, right? The less money you have, the more likely banks are going to be willing to lend it to you, which is a little counterintuitive, but that's kind of just the way it works. And so another situation that I've had numerous times that a new CEO will come on board, they have an audit, they start looking into the audit report and they start seeing some pretty alarming language, whether it's significant findings from an audit, especially bad if you are an organization that receives federal funds, right? So you have like a single audit and you have numerous issues cited as internal controls or other material weaknesses. But in one particular case, I had a client that came on board and was completely shocked to learn that their organization was a going concern. And what does a going concern mean? It basically says in print, in writing, formally in your audit report that we as the auditors are in great doubt that you will continue beyond the next 12 months, right? And typically within that language, they will have a management have an opportunity to respond to that. But all of that to say, if you're stepping into an organization and you think the organization is viable, sustainable, or at least that's what you're being told or led to believe, and you now have this audit report that's going to go out to your funders that says quite the contrary, that is a big surprise because you as a CEO, you're going to be in a situation where you now have to explain maybe why it said that you're a going concern, what you're doing about that going concern, and how are you progressing on that path, right? What success are you having with respect to that going concern? So again, all of this is disclosed in your footnotes. So loan payments, loan maturity schedules, those are in the footnotes to your audited financial statements or review or compilation or anything like that that you have. Or like the going concern language, that's pretty alarming, or any sort of like findings, exceptions, or material weaknesses. You want to read all of those footnotes. A lot of people focus on the numbers, and those are the first few pages of a financial report, but they don't read all of the language on the back, all of the copy that seems very technical and jargony. That's where you find a lot of the tea. Like that's where the drama lies, right? That's where you want to pay really close attention to what those notes say, because it could have some really good insights that are going to impact you for years to come. And I've also seen situations where tax returns are not filed. I've seen this so many times. I'm actually dealing with a client right now that, they step into the organization, they find out that the 990s have not been filed for 2 years, right? This is a problem on so many different levels, right? Obvious, lack of compliance with the IRS, of course, that's an obvious issue, right? But then there's an issue of why are the 990s not filed? Is it just an oversight, in which case we can hire our accountant, a CPA can get that thing filed for you, and we'll pay the penalties to the IRS, which last I checked are $20 per day for those 990s not being filed. And, the IRS is pretty savage these days, and they do not really forgive those penalties in the same way that they used to. So just kind of know that. So that's like an issue. But kind of unpacking it a little bit more, I would say the overwhelming majority, if not basically every time that an organization has failed to file a 990 was because their books are a mess and they can't actually structure them in a way that they can send that financial data off to an accountant to actually prepare and submit that 990. So if your 990s, if you've asked for the last filed 990 and it's several years old, you should be asking a lot more questions about why this 990 has not been filed and what are the root causes for why it's not filed and what is the plan to not be filed. Worth mentioning too, since I talked about audits already, that typically when an organization is audited, the IRS has a question on the 990 that will say, is your organization audited? And typically, with the exception of rare instances or exceptions, an audit would need to be done before a tax return is filed. So the audit proves that the numbers are right, and then they take those correct right numbers and they populate those into the 990. I'm kind of oversimplifying here. But if your 990 is not filed rather, it might be because your audit is off track. which then, again, continue to peel back the layers of the onion. Why is the audit not done? What is happening? Is it we can't find an auditor? Is it our books are just too messy? We don't feel confident in completing an audit? Ask all the questions, right? And so this happens all the time. And while I'm on the soapbox, I feel like another area that really catches people off guard, that have a really tremendous impact, and I'll talk about this a little bit later, is on payroll taxes and making sure that all of your payroll filings are made, and more importantly, the remittance of your payroll taxes are made. Because while that typically goes to the IRS, the Department of Labor also has a vested interest in withholding things from people's paychecks and not remitting them to the appropriate places. So if you're seeing a backlog of payroll tax issues, or you're new into this the CEO seat and you're starting to see notices for back payroll taxes, that is not something to sleep on. Speaking of the IRS being savage, the fines and penalties are crushing to nonprofit organizations, and they are very unforgiving about that. So we'll talk a little bit more about other red flags to look for, and I'll give you some corrective action on or preventative things to do to make sure your organization doesn't find yourself in that seat. But these are real life situations that I've actually witnessed new CEOs kind of experiencing firsthand, that in hindsight, asking for a lot of these reports ahead of time and asking a lot of follow-up questions is really going to save you a lot of heartache later on. Okay, hold on. What's going on here? Okay, so I've kind of mentioned this. A lot of times things are not so obvious with respect to risk, right? We've talked about some risk that might show up clear as day written in an audit report, but it's not necessarily always, it's not always blatantly obvious to people. A lot of times risks aren't always blatant examples of, hey, you're missing this, or hey, you have internal controls, or hey, we've actually identified these issues. A lot of risks are always baked into process gaps, things that we could resolve, prevent, or completely mitigate with the enhancement of processes. So we really need to think about, what is the likelihood of some of these risks? What is the impact of some of these risks? How do we, again, mitigate some of these hidden risks? And we're going to talk a little bit more about that later. And I'm going to give you a lot of questions that you should be asking before you go into these organizations to figure out, are these process issues? Are they people issues? What is the likelihood of some of these risks? And more importantly, what is the impact? Some of these are low impact, not that severe, but some of these that seem fairly insignificant in the grand scheme of life can have a pretty tremendous impact on, on your organization. Okay, just trying to keep tabs on a couple questions here. I'll talk about some of these here in a little bit, but just to follow up on one of the questions, Phyllis said, should the audited financials be available publicly? If so, where? I'm all for transparency. I don't think there's anything wrong with having those financial statements audited, or the audited financial statements made publicly. Oftentimes where I see this is organizations will typically have a section on their website. If they are making these documents made available public, they will have both their 990, their audit, oftentimes their annual report, or any other sort of, kind of resource in that way made available to the public. And typically people get in the habit of posting those regularly. So they'll have, several years that people can access all on their website. But technically you only have to make them available if somebody asks for them. And that's usually disclosed on your 990, whether you make that a policy of yours or not. And that's best practice. You should. But some organizations take it a whole nother step, and they make them available on their website. So that's an option. Okay, so let's dive into some of these key questions. These are all the things. Now that I've struck a little bit of fear in you, I've given you some real life examples of, hey, what could go wrong. More importantly, here are some of the questions that you should be asking yourself, or the questions at least that I would be asking myself. Okay, so let's talk about the budget and the financials. So hopefully as an incoming CEO, even maybe before you've accepted the position, you've started asking for financial information. I think that's completely reasonable. You want to know what you're signing up for. I would be asking for those audited financial statements and paying really close attention to when is the last time they were audited. So for example, if they are a December year end, and you would kind of expect that they would be done with their December 2024 audit by now. If not, I'd be asking some questions. But if you ask for the last available audit and you know that they are required to be audited every year, and the last audit you got was from 2022, I would be asking a lot of questions, right? So ask for an audit. Ask for a copy of the 990 if you can't get that online. Sometimes there's a lag with the IRS or GuideStar or some of these other resources that make 990s available for free. Those have a lag in them. So just because it's not on GuideStar, don't panic because it just could be a delay, especially if an organization just either submitted it on extension and then the lag time between it gets posted on these websites. So ask the organization for a 990, ask the organization for the last available audit if they've had one, the last copy of the internal financial statements, right? They're internally prepared financial statements, different than the audited financial statements, and maybe even a copy of the current year budget just to see what are their sources of revenue, what are their expenses, what are they projecting the year at, and what is seemingly missing or not, or seemingly confusing or outside of your typical expectations. But I would be asking, once you get the budget and the monthly financials in hand, I would be asking these specific questions. Like, when was the budget last approved? Is it approved? What is that process? Who creates it, right? What assumptions were used? In other words, is the budget just, oh, we're going to, increase everything by 3% every year, even though the 3% goal for fundraising next year that you have in the budget is wildly off than what we've actually experienced this year, good or bad, right? So does this budget even make sense? Are there reasonable assumptions baked into the budget? Has it been thoughtfully put together? Is it a collaborative effort with maybe other directors within the organization? Have the program people seen it? Has your development director signed off on this fundraising goal, right? Or are they in complete disagreement with what that goal is and think it's completely unreasonable, right? So ask those questions about what is their budget process? Does the board look at it? Do they have a finance committee? Is the finance committee reviewing it and approving it? Are they asking lots of questions? Maybe how savvy is that finance committee? How long have people been on that committee? And how many years have they seen this kind of budget process? And then also it'd be really interesting to see a budget versus actual from last year. Is the budget pretty close in line with what they actually, how they actually performed? And to be fair, a lot of budgets in nonprofit worlds become almost completely obsolete pretty quickly after being published because we have to oftentimes get the budget approved before we even get final acknowledgement of a lot of grants that maybe are happening all at the same time. But it is helpful to understand what are the differences between the budget and actual. Was that planned? Was it unplanned? Does it seem reasonable? Is there evidence of like bad budgeting, or was it just, hey, we were really blessed with some really great things that happened within our organization, right? And then also asking questions around just allocations and grant tracking. Is there a mechanism to track dollars by grants? If you are exploring or currently in a seat of an organization that has lots of different grants or lots of different programs, is there a methodology, rhyme or reason, or even general capacity to be able to track these costs by those different cost centers, right? Whether it's by location or by program or by grant or all of the above. Was your budget designed that way? Or if not, does your accounting system, has it been built out that way? And is it functioning in that way that you know that you can kind of grow into that? So those are the things that I would be asking. I know I have a lot more questions I threw out than what was simply on the side, the slides, but really look at that financial report and ask a lot of questions, not just on the numbers itself, but who's involved in those numbers. And for the internal financial reports, who prepares those? Is that an outsourced provider? Is it an in-house person? Is it some hybrid? Many of our clients will have kind of a bookkeeper in-house and we provide the financial reports. Maybe it's an all in-house. And how timely are these reports? Meaning, if you have an in-house CFO, do you get financial reports on a monthly basis? Or does there seem to be this vague, unexplained reason why you can't get regular financial reports? Is it like, oh, they're usually delayed several months, but why are they getting delayed? And does that really seem logical or reasonable, right? And so kind of asking all of those questions. Yeah, somebody says, I wish I would have asked these questions before I took my last job. I would have never done it. Gary, this is exactly why I am having this conversation. I've seen this so many different times and I'm so passionate about it. And you know me, the accounting person in the room, I'm certainly asking all of these questions because I just have a genuine interest, but I'm always like, what am I missing from this story? Okay, so that's like the budget and the internal financial reports, not to be confused with these external reports, so the audits and 990s. So these are the things that I would be asking myself. At a minimum, ask for the last two audits and 990s, paying close attention to when are those last 990s complete or audits, depending on if your organization is getting audited. Not every organization has to get audited, it's not required. But sometimes it's a review or a compilation, which I kind of describe the difference between an audit. Well, let me start with a compilation. A compilation is a financial report that basically means you're going to give us your numbers and we're going to believe you and we're just going to put it in a pretty format that's in compliance with generally accepted accounting principles. I'm kind of oversimplifying. That's basically it. A review is a technical term on type of a financial report that I call kind of a baby audit-ish. And more or less how I would describe that is they take your numbers, they mostly take your word. They're going to make some inquiries and ask you lots of questions. They might do a little of, analysis to see, does it seem reasonable? But they're more or less going to like hear your responses, make some reasonable judgment and say, okay, we're moving on. And they make it look pretty and conform with generally accepted accounting principles. So that's kind of a review. An audit is like, you're going to share your numbers, but you're going to prove it, right? You're going to prove it through documentation, through substantiation. So not every organization gets an audit. Some get a review, some get a compilation, some get none. They just use their monthly financial reports, and that's okay. But if they do get audited, ask those questions and get to the last two copies of the audit report. Every nonprofit, unless they have like a religious exemption, they're considered a house of worship, should have some version of a 990, even if they're a private foundation or some other membership, association, whatever. There's different types of nonprofits, but more or less, you should assume that any nonprofit you're considering working with has an obligation to pay or to file a tax return and get those copies. And like I said, number one, look and see when was the last time one was filed. And if there are any odd delays, ask questions. You can also, by the way, on your audit report, you can go to your audit report and it'll, it's like the cover page, like, oh, this is the organization's name. You flip it over. That's the very first page of, the audit report typically. And it's usually like 1 or 2 pages, depending on a review or a compilation or audit. And at the very bottom of that audit report, it will have a date. And that's one thing I pay attention to, because if I have an organization that says, for example, has like a December 2023, fiscal year ended December of 2023, right? And I'm looking at that audit report. And that auditor didn't sign that audit opinion until like June of 2025. I'm like, now how did it take you a whole year and a half to get that audit done? And what was happening over there that required a year and a half for you to get this audit finalized, right? So even if they have an audit report, and even if they pay attention to some of those dates and try to understand why did it take so long, because that could give you some pretty clear evidence of the fact that your financial function is not working as smoothly as you want it to. So look at those last audits. Look at any findings, right? So don't just ask for the audits, but ask for the management letter, right? Were there any comments shared with your audit? So typically, I'm kind of oversimplifying, not all comments or findings are specifically spelled out in your audited financial statements. Oftentimes, there's a letter of communication sent to those charged with governance. Kind of in common language, we call that a management letter. And that gives a little bit more detail, a lot more detail about different observations, perhaps recommendations, and sometimes even management's response to these. So that's typically a separate letter that is issued at the same time. Now, if your organization it has a single audit, right, which means you have federal funds above a certain threshold, they will typically get an audit, and oftentimes they're done at the same time as your normal audit. So it's 2 separate audits, but we kind of think about them as one oftentimes because they're done at the same time. That audit with a single audit typically spells out any findings with respect to the federal program spelled out in that audit report, okay? And those are things you want to pay special close attention to because that gets filed with the feds and that gets communicated. So if you have numerous findings, which I see all the time, if you have numerous findings, like you want to know you're walking into a situation that needs some TLC, it needs some work. A lot of times it's around controls, not necessarily fraud, it's not necessarily mismanagement. It's like, all right, we need to put some internal controls in place, right? So these are all things that you want to get the audit reports and any other corresponding management letters to know, hey, the auditors successfully completed the audit. That's great. That's step number 1. but were there any issues identified in that audit? And what has the organization done since that time to address those issues, right? And so, the worst case scenario is that like, okay, the auditors issued the audit report. They said all these things are an issue. Okay, great. That happened, 6 months ago. I'm stepping into this new position as a CEO. I've got a little bit of time only to find out the auditors are coming back out again because it's that time of year again. And none of these issues have been addressed. So now you have that situation listed 2 years in a row on your audit, which is especially bad if this audit report's going to your funders or you have a federal program and that's getting reported to the feds. And I mentioned a little bit earlier on, was there any going concern language? I mentioned that before. Is there an issue with going concern, meaning your organization is the auditors are not convinced that your organization will continue on over the next 12 months. That's essentially what a going concern means. And pay close attention to if it does have some language like that, or if it at least has some sort of like management plan, meaning your organization has been operating, typically the reason why they have that is it's been operating at a deficit for so long. And it has what they call negative equity or negative net assets. If you look at your balance sheet, under the equity section, or usually it's called net asset section, if that number is negative and you're borrowing money to help fund operations, typically that is a perfect classic case for which the auditors are going to say, I don't know if y'all are going to be around much longer. Especially if any of your funding has drastically changed and cash flow is a bit of an issue. So take a look at that. But on those disclosures, those footnotes, all those words behind all the pages that have all the numbers on it, that usually will have a management plan in place. And it would be really helpful for me, good information for me as a new CEO, to be looking at those notes and understanding what was the response from management at the time. Are we still in agreement with that plan? Are we on the right trajectory with that plan? Or am I need to come up with a new story that I need to, explain what our new plan is? Or maybe we don't even have a plan. Maybe that's step number one, right? And really collaborating with your board to figure out, we need to have an explanation here, and we need to be prepared to have those conversations. So that's Audit 990s. I think I've got a few more. We've got a few more questions kind of related to this. Do you have details on when a nonprofit is required to perform an audit versus a financial review? Great question. There is a website. I don't know if I can find it off the fly. So Joel, the tricky thing is it is situational by, I'll start at the more simplistic level. By state is the first place we look. So different states have different requirements for what is the minimum threshold for which a nonprofit has to get an audit or review, right? And so first start looking at your state. If your funders don't already require it, and then look at your state. Some states are as low as like $300,000 a year in annual revenue is going to now warrant an audit as required by the states, right? So the state government mandates that. It's interesting because in the state of Illinois, I don't know if they've recently changed it, but I think they were one of the organizations. So I'm in St. Louis, Missouri, right? I'm right on the river. I can almost see Illinois from here, from my office, right? In Missouri, I often joke, we're like the land of the lawless over here. There's no requirements for any audit of any state. You can be $100 million a year organization and not be required to do an audit at all in the state of Missouri, right? The state's not going to force you to get an audit. You go 5 miles across the river here and into Illinois, and if you're an organization set up over there, then don't quote me on this. I think it's something like really low, like 300,000, 500,000. Thank you, Susan. That was exactly the website I was looking for. So let me go ahead and copy and paste that in here. But you can go to this website and you can see if your state requires. Let me see if I can find some way to share. I'm going to drop it in the chat here.
I got it.
All attendee, everyone. That's the website I was looking for. I was like, I can't pull it up, all these things on my screen. So that's the first place to look. Go look at your state. So check out this website. I love referencing this website because that will tell you if your state requires an audit or a review and at which point it does. Second to that, your funders. Do your funders require an audit or review? Next would be your banking institution. If you have any sort of line of credit or loan or anything of that nature, they might require an audit. Those are probably the primary sources of an audit. A funder of some sort, your bank or your state would require it. Beyond that, if that's not required, usually it's voluntary. honestly, an organization, their board decides that they want to do that. Oh, I should also say accreditation. Your accrediting body, if you are an accredited organization by some body of authority, they might require some sort of audit, review, or compilation. So if the state, your funders, your bank, none of them require it, check out your accreditation. Or if you were aspiring to be accredited, usually they require some variation of getting a formal financial report prepared by some outside CPA. Hope that helps. Okay. I'm going to get through some of the other questions. I'm trying to address them on a topic basis. So beyond the audit, let's talk about it though. So sometimes we get a little confused about how many audits do we have? What are the different types of audits, et cetera? So there are actually a couple different audits. So I think about like the formal audits that I was just describing, the financial statement audits, but there are also funder audits or reviews or site visits, different things, right? So I would, if you have really substantial funding sources, especially federal funds or any other government agencies, I would be asking questions about funder audits, reviews, or site visits. What are those findings, right? And can you take a look at those findings? Because these findings are typically not going to just address your financial control issues or the state of your financial management, but it's also going to take into consideration oftentimes your programmatic controls, right? So whether it's eligibility into your programs or billing accuracy of program services provided, like that sort of thing. So paying attention to what those audits are saying and what those findings are. So ask those questions. Based on, these contracts, especially government contracts, almost always have some element of funder, site visits, audits, reviews, whatever they call it. It all varies. They use kind of different language, but ask those questions. What were the issues or findings that came up from that, if any? I mentioned this a little bit earlier about accreditation. If you are an organization that is getting accredited, ask for how that review went. Were there a lot of issues? Were there findings? Were you reaccredited, right? When is the next accreditation cycle? That's always an important thing to know. Because if you're a new CEO stepping into a seat and, oh, by the way, 6 months from now, our accreditation process starts, that's a lot of work to get reaccredited. And then also just asking those questions about who owns these processes, whether it's like through the accreditation process or who is the liaison within the organization that interacts with our different funding sources, who is the one that really spearheads those site visits or reviews, just so you know that there's some level of ownership there and kind of understanding what their background is and maybe how long they've been in that role. Okay, so some of these other things that I find more often than not pop up that are a bit of a surprise and maybe not always completely obvious, right? Are funder reports current and complete, right? Have they been timely filed? Are we getting paid on these invoices or these funding reports that we're sending off? Who's reviewing them? Who's preparing them? Is there a level of accuracy there? Do you have ongoing billing issues? Meaning like reimbursement or payment issues. And I'll give a real quick story. I want to keep going because I have some other slides I want to get through. I want to get through all this content, but the question is really just asking some of the obvious, not so obvious questions. I had a new client one time I was working with that was like, Tasha, I don't understand. We have all these contracts. We have more than enough money to pay for our operations. Our budget to actual looks okay. I don't understand. We have no money in the bank. So I don't know. I feel like within 30 minutes, I started looking at their accounting system and they have all these invoices outstanding, right? They haven't been paid by the funders. And I knew who some of these funders were. I'm like, they're usually pretty quick with paying. I don't understand this either. So long story short, I get into a little bit of digging, come to realize that there were all these billing errors and issues that, were never remedied, right? So they submitted the invoices. There were all these billing issues. The funder kicked it back. The internal team at the time did not correct these invoices and resubmit them. So on paper, it looked like the organization operationally was working really well. The budget to actual was great. Everything's fine. But then the bank account did not reflect that, right? And so I think we had something like $600,000 of accounts receivable just out there lingering that would have never been collected because the billing issues weren't being addressed. So those are the kind of things that you want to be asking for, or just asking questions about, or, what is the significance of the funding reports, and who manages that, and has that gone well, right? And even if you're new within an organization, feel free to talk to your funders about it. Have we typically been timely? Like, any recommendations or advice you might give us that we don't already know about? So those are all things that you could be looking at there. Okay, now that we've talked about some of the reports, the questions, the deliverables, and all the questions about, how things might be presenting, I want to share some more on, the people doing the work. Sometimes it's a process issue. Sometimes it's a system issue. And many times I find in my work that sometimes it's a people issue, right? That can't really be addressed by adding more people, and it can't always be addressed by necessarily tweaking a process. So these are the kinds of questions that I would certainly be asking or paying attention to if I was a newly seated CEO, thinking about, who is running my financial management. And if there seems to be some red flags, some cracks in the foundation, you definitely want to be asking a lot of these questions around the people, the side of things. So who's behind the numbers? Asking questions even ahead of time, I think it's totally reasonable on the financial side. Is this an internal staff? How long have they been in seat? What is their experience? What's their tenure like? Or if it's an outsourced provider, how long have they been supporting your organization? And does there seem to be any individuals within the organization that help support that outsourced team? Is there any gaps in the service? Are we reliably getting the financial reports that we need? Are the financial reports like meaningful, impactful? Some of these questions you might ask in the interview process. Some you might continue to ask after you take that position. But then also asking beyond the people that are managing the day-to-day finances of the organization and doing the financial reports, is there any other oversight happening within the financial department? So think about a finance committee or the board, and what is their level of involvement? Who sits on those various committees, or who's kind of paying attention? How long have they been in those roles? And just kind of what is their general background? And I think that's really helpful to ask and understand. And typically it's going to be board members are going to be interviewing you if you're a CEO. So they should have a good sense of who these individuals are that are serving on their finance committee. Because I will tell you, a board made up of current auditors and like CPAs that do this work, and people like me that do the ongoing fractional CFO work, is a much different board experience and a different level of oversight than people that are focused primarily on like investments and finance and banking. I think it's really important to have a variety of those skills within a finance committee, but if you have one over the other, then people that are going to have more of an audit background and more of a day-to-day accounting background are going to be paying attention with a little more scrutiny sometimes than those that are more into like investment strategy and things like that. A lot of times people think just finance is finance and it's all created the same, but it's just like anything else. You wouldn't assume one doctor that specializes in one thing is going to be an expert in this over here, right? It's just different backgrounds, different experience. So we kind of ask those questions about, who's really doing behind the numbers, or what's actually happened behind the numbers. I'm going to take on Kevin's question next on when the interview process gets serious, how would it be received if the candidate asks for the audit report presentation to senior management, the board, et cetera? Hopefully you can at minimum find the 990. If I were interviewing for a CEO position, the 990 at a minimum should be on the website. In fact, even whenever people reach out to me to talk to us about potentially doing their accounting work, we'll pull up the 990 and we can get a lot of insights from the 990. On that 990, will also tell you if they get audited. So that will give you a clear picture of whether they get audited or not. And you could, I think, casually bring that up in conversation. I mean, probably wouldn't do it in my screening interview, probably wouldn't do it in the first round interview. But if you've made it to the last round and they're having conversations with you about, your first 90 days and what would you do within the organization and what are your dreams for it, et cetera. Well, I think, frankly, before you can answer those questions, you really need to have a financial picture of where the organization is at. So I think at that point, I think it's very reasonable to say, I was noticing on your 990 that you had this, this, and this. I also noticed that on the 990, it says that you're audited. Can you share more about that audit? Or would you be comfortable sharing with me, a copy of that audit report? And maybe they could even have it on their website and it's already made available to you. So I don't think it's completely unreasonable to be asking those questions. And then once you get further down the interviewing process, I think it's completely reasonable to understand more about the strategic plan of the organization, the direction the board wants it to go in, what is their fundraising goals, what is the basis for that? I would be asking all of those sorts of questions. I want to make sure that you're inheriting a organization that's financially sustainable, that it has a plan and a backing from that board, that it has a reasonable funding stream, and that you're not being put in a situation where it's going to be really difficult for anybody to succeed in that role without a healthy financial picture and or a board that's willing to help step in and fill in that gap, if you will. Like, what is the plan? I've seen so many different organizations that will hire new CEOs thinking that they're just magically going to be able to turn this entire financial ship around. But the board's not really stepping in and helping identify sources of revenue either, which I think is just it's a mountain too far to climb. Okay. So these are the things that I would be looking for. If you didn't already get this or it wasn't already shared with you in the interview process, I think you can certainly have conversations about it. A lot of this information, so some of this information on the 990s, you might be able to get even ahead of time. But let's say you've already accepted the job. We're already in this game. We've already accepted, and maybe you already work for the organization, right? But certainly within the first week, I would be asking from your finance team, if you don't have this already, to be getting the most recent monthly financial reporting package, getting a budget to actual report, which should be included in that monthly financial reporting package. But if it's not, I would be asking for a budget to actual report. I would be interested to see the fund balances on any sort of restricted grants, like how much is left on those restricted grants, and then any past audits and findings, at least the last 2 years, not only just the audit reports, but any subsequent findings, and not just the financial statement audits, but also any sort of like site visits or audits. So those would be the things I would want to be seeing pretty much on like day one, so that I can get a good handle on identifying a couple different red flags here. And I'm going to talk about those red flags here. So these are the things that upon that request, I'm looking for a couple things here. I'm looking for reporting delays. Well, I guess really first and foremost, is my financial function able to even provide that for me? If the answer is no, that's really red flag number one, right? Because all of these things are pretty reasonable requests that any sophisticated organization with a level of maturity in their financial department should be able to provide you, right? And if you're not able to get that, that's red flag number one. Red flag, no specific numerical order, is really just reporting delays. So if you get a financial report and it's, September, you would 24th today, you would expect to get an August report. If the last report that you have is from January, that's a big red flag. That's a big red flag. And start asking a lot of questions on why we don't have a more recent financial report, and what is this frequency in which you typically get those reports. Conflicting data. So if you're starting to meet with your development director and they're telling you this is where we're at with fundraising, and then on your financial, your CFO or your financial records are telling you something completely different, that's a bit of a problem. If you're seeing that you have I think that's probably the most significant one. If you're getting conflicting data that differs between different departments, is a bit of a problem. But also if you're being told, one thing with respect to the financial health of the organization, but for example, you're getting an audit report that says you're going concern, that's a problem. Or if you see that there is an audit with some findings and you're following up with different team members that might be responsible for that corrective action, are you getting the same information that jives with that management plan? Any other sort of conflicting data would be a bit of a red flag that I want to dive into. Which kind of leads me to my next point. If there's no follow-up from past findings, right? Or if we have not actually put the corrective action plan in place, that could be a bit of a red flag, right? So especially if there was an audit report, there was some findings in that audit, somebody from management, whether it was the board or a director of finance or former executive director or CEO, if they've responded to it and nobody's actually completed that corrective action plan, that's going to be a bit of a red flag and something that you want to come up with a plan to tackle pretty quickly so that we don't have a repeat recurrence of those past audit issues. No one owning compliance. So it's kind of like who's responsible for the audit, who's responsible for the site visits for the funders, who's responsible for, coordinating the 990, who's responsible for the accreditation process or relicensing or registering with the state or whatever your level of compliance is. If it's unclear who's supposed to be owning that process, I would definitely want to get some clarity around roles and responsibilities there and just figure out, okay, who's actually in charge of this? Because if nobody knows who's in charge, then more likely than not, payroll is another thing I didn't mention. But you definitely want to get some clarity on that because that could be a big red flag. And then delayed financial reporting, not just internally, but with your funders, right? So if you're finding out that your funder invoices are being sent late, or their periodic reporting is sent late, or anything like that that's reporting to external sources, that is a bit of a red flag as well. Okay, so that's within the first week. Let's carry on with the first 90 days, right? So within that first 90 days, like asking for all those things within the first week, then starting to pour over the details of that, reviewing all the financial documentation, clarifying roles and responsibilities, making sure that you understand what that looks like. What we do internally is create what we call like an accounting process document. So it's all like the key processes within the accounting or financial function. And then we have another column, like who's responsible for it, what is the frequency of it, and kind of elaborate a little bit more on what those tasks are. So it could be something as simple as a really simple matrix in Excel that you can build, or in a Word document, or something that really delineates who is responsible for what. With respect to the financial management. And that could be a combination of internal and external people as well. Creating some sort of like communication cadence on understanding, okay, if I'm going to get financial reports on the 15th of every month, then I'm going to meet with my CFO on the 15th of every month, and that goes to the board by the 20th of every month, whatever it might be. Just getting some sort of rhythm and cadence, not at a minimum between you and your finance department, but also maybe between your finance department and other directors within the organization. So kind of determining what kind of communication is happening beyond just that relationship between you and your finance person. And then, of course, just building your financial story. So kind of evaluating, all right, where are we at? Where are we coming from? What known gaps do we have? And if we need to continue to be strategic about how we craft that story, whether it's we have low operating reserves, or maybe we have too high of operating reserves, or maybe we've had issues with the audit, but this is a corrective plan that we've addressed, or whatever that might be. Kind of think about what that financial story is, because that's going to be really important for you when you start to have conversations with donors, with funders. Board members are going to want updates of those sort of things. So start building that financial story of your organization and feel like you can speak comfortably and confidently about what the organization is. Might also include restricted grants, where we're at with those restricted grants, how we spent those, how those are doing, et cetera. So that's a bit of the financial story. Okay. I wanted to share this really cool story of a client that I worked with that had a really interesting story. I won't go into all of the details with it, but just wanted to give kind of our perspective on this. This is something that we're really passionate about uncovering all the red flags, fixing the red flags, helping the organization. Most red flags, it's not bad intentions. It's not trying to be malicious. It's not fraud. People are not trying to steal. It's some sort of lack of visibility. It's lack of processes oftentimes. Quite frankly, it's having the wrong people in the wrong seat oftentimes. And I just wanted to share this kind of fun quote from a client of ours recently, that if you are looking for support in this, or you want a second opinion, or you just want to pick my brain on something, please just shoot me a message. I've had numerous people reach out to me, which again is why this whole presentation was inspired. Tasha, would you mind just taking a quick look at this? It just doesn't feel right. And I've had lots of conversations like that. So if you're looking for someone just to say, tell me I'm not crazy if I think this, happy to have that conversation with you. So just kind of think about that. You can go to our website. You can get in touch with me there. All right. So what can you do this week? I'm going to leave you with these things, then I'm going to open up for a few questions. What can you do this week? You can start by reviewing that audit 990 if you haven't done that already. I'd go back the last couple of years if you have not seen those yet. Ask for funder audit summaries, so site visits, audits, whatever they call them. Ask for them, accreditation, summaries, anything that would make any sort of recommendations and observations of issues. And it's not just financial side. I want to really caution you on that. It's also like programmatic side, right? And so that's usually a dual component there for different funder summaries. Meet with your financial lead or figure out who's leading your organization and ask lots of questions if you've historically had issues in these particular categories. and identify areas that seem a little risky for you. Where are the gaps that have been identified either by outside people or maybe in conversation with your financial team, maybe from your board? I'm sure your finance committee, if you have a pretty savvy chair, they'll have all kinds of opinions about maybe how you can improve things within your financial management. So these are all things that you can start looking at. I would go immediately to those outside sources and just start reviewing those reports because they usually give a lot of insights and a lot of recommendations there. So I want to go ahead and drop into some questions. I know I've been answering questions throughout. I want to leave a few more minutes to address any other sort of questions, but I'm going to shamelessly put these slides up here for anybody that is interested in getting more resources. In my free time, I often joke, I also do a podcast. It's called A Modern Nonprofit Podcast. I talk about most things are not financial related at all. I just talk about all the cool tips, tricks, hacks that organizations can find ways to work smarter, not harder. We talk about all things from like fundraising to board development to leadership tactics to technology, all different sorts of things. So if you haven't already checked out that podcast, do that. I think you'll find it really insightful. Go to any platform where you would listen to any sort of podcast and you can check it out there. And then I'm going to leave it on this slide here. We're going to have another webinar that's going to be talking more about budgeting. It's coming up on budget season for those that are in December year ends, and some of you all are already probably having nightmares about that. If you want to understand more about how we approach budgeting here for our 200 plus clients, I'm going to be going over that and on October 29th at 2 p.m. Central Time. So I think Kim's going to drop the link here because we have the link already if you want to go ahead and pre-register for that. Kim, if you want to drop that in the chat.
It's there. It should be there.
There you go. Cool. Thanks. That should be in the chat for everybody. If you want to go ahead and pre-register for that, go ahead and check that out. And looks like I just have one question left, but go ahead and I'm happy to stick around until the top of the hour. But I have another question here on what is the most common financial pitfalls for brand new nonprofits with zero initial funding? It sounds kind of crazy to say, but I would say exactly that. It's the lack of funding, right? It's getting a consistent and here, let me share my screen one more time so you guys get this. It's getting, I think it's getting the momentum for funding. That's the biggest issue, right? And making that sustainable. I think it's a much heavier lift to grow an organization than people realize. I've recently seen a statistic that says something about 80% of nonprofits are less than $250,000 in revenue. So I think it's building that revenue stream and keeping that momentum going to the point that you can create ongoing paid team members, right? To continue that operation on into perpetuity. I think a lot of times organizations start and it takes so much longer than they realize to build that funding stream that's substantial enough to pay either part-time or even full-time permanent employees. And I think as a result of that, founders usually find themselves pretty burnt out, or they just operate so much less than what they want to because they don't have the manpower to make it happen. So I would say building the common financial pitfalls are that with zero initial funding is just getting funding, frankly. And then I think often too, because that's maybe not the angle you were going for, but in a slightly different angle from that, I think is waiting too long to get help that you need, whether it's from a lawyer or from an accountant. So oftentimes I get calls from people that are pretty frantic with pretty messy situations that they are a bit more reactive and needing to get cleaned up. And admittedly, I get it because they just didn't have the money to hire people. So yeah, it's asking for help too late. And I often see this too with things like payroll. So we try to save money on things like professional services, even payroll processing. I recognize every dollar matters in nonprofits, but payroll processing at the end of the day is fairly inexpensive with some platform like Gusto or Intuit Payroll, something like that. And organizations try to do it all themselves when they're not really equipped to do it. And they find themselves in some pretty hot water because they they have failed to file payroll taxes, or they didn't do their quarterly reports okay, or they failed to file their tax return because they lost sight of it or something to that nature. So those sort of things, like I said, accumulate pretty significant fines and penalties, and organizations find themselves in situations that take years to kind of unpack because it adds up quickly. So hope that helps, Alpha. I'm not sure that's the angle you were going for, but It's really hard to start and grow nonprofits. So,
Looks like you have one more
okay,
question.
so Rick had a question. How do you get a real handle on true overhead? What's the best way to find if overhead in audited financial statements is buried in project costs and elsewhere? See, Rick, that's a problem because something like overhead is such a broad statement. It means something different to all kinds of organizations, right? So overhead for some people might mean things like actual facilities for all employees, right? And some people would argue, well, facilities used for programmatic staff is not really overhead, it's a direct program expense. So the reason why you're probably asking this question is because it's a kind of a broad, ambiguous term. What does overhead mean? Some people look at it truly as like administrative cost only, not directly tied to programs or fundraising. And that's a little bit easier to track because that should be broken out on your 990 if you file a full 990, and it should also be in your audited financial statements through the functional allocation of expenses. It's on the statement of functional expenses. And there should be a section for general administrative expenses, should be a section for fundraising, and there should be a section for programs, or maybe multiple columns for multiple programs if that's the case. But the reason why this is such a tricky question is because I think it means something different to different people. So yeah, I mean, there's a reason why your overhead seems a little hard to measure because you have to kind of define what that looks like, right? Does overhead simply mean like something separate than salaries and direct program supplies? Then that means one definition. If it's truly just administrative, but that includes administrative salaries, that means something different. So unfortunately, I wish I had a better answer for you. Okay, in California, we consistently hear, I'll take this last question and then we'll wrap it up. I'm in California and consistently hear we don't have to do an audit because we are under $2 million. What else can I ask for to review for red flags? Can I ask to sit in on a finance committee meeting? Okay, so great question. A lot of times people think an audit means something. I need to do a whole webinar about this. What an audit means and what it doesn't mean, right? A lot of times an audit means things like testing for internal controls or for identifying red flags. And it can uncover those things, but an audit is really designed to say, are your financial numbers materially correct? Right? It is not there to uncover fraud specifically. It might as a result of the procedures, but is not designed for that. So a lot of times, and more often than not, I find things like small churches and different groups that are ran by a lot of volunteers, they want to have some sort of peace of mind that there's nothing shady going on in their financial management. So they think an audit is the key. But the thing is, an audit nowadays, you can almost find it, you can't hardly find an audit for less than $20,000, $30,000 a year, right? And typically an audit is done every year if it's going to be of high quality. So a lot of times what people are looking for is what I call like agreed upon procedures. That's what they call it in the audit world. So if you reach out to a CPA, you would ask this sort of question, like, do you do agreed upon procedures? And it's basically intentional targeted procedures designed to uncover very specific things. So for example, do I have best practices in place with respect to my internal controls? If that's what you're looking to answer, then that's something that would fall under like agreed upon procedures, and you would hire, a consultant or a CPA if they do that type of consulting work to give you kind of a more of a memo like report on the state of those things. But a lot of people assume an audit or review is going to do that. In fact, a review doesn't look at any of your internal controls, more or less. And a review, like I said, looks at your numbers, but mostly takes your word for it. So it's not going to give you that assurance that there are no red flags, right? So, for example, a review is not even probably going to uncover the fact that your billing is consistently submitted late in accordance with your contract terms every single month. It's just not going to uncover that, right? And it's certainly not going to uncover the fact that your program is not performing eligibility requirements properly or something to that nature. I'm making some stuff up off the top of my head. So if you're looking for very specific things, normally around internal controls, red flags, is there fraud happening, et cetera, are there any recommendations just for best practices? That usually falls under what I would call an agreed upon procedure, way cheaper than an audit, typically going to give you more insights and more impactful for your organization and that leadership. So hope that helps. But you're right, $2 million in California. It seems like the latest number that I remember. Thank you all so much for joining me. We're going to wrap up. I will see you all back here in October. I hope you sign up and we'll see you next time. Thanks, everybody.